Hope everybody drank water. I'm still sitting with this idiot on my side playing games. Wake up. Yeah, okay. Anyways, today I'm just gonna make like a pretty short video. Let me just clean everything. Today, the boy's gonna be making a clean short video on how to identify short-term highs and lows or buy stops and sell stops that their price has a very high probability when it comes to reacting off or dropping to, if that makes any sense, right? Just gonna hide everything for now. Opening up a clean chart, So when we're trading using ICT Concepts, we basically have a barrier, right? Which is pretty much, let me just remove that. Yeah. Okay. Yeah. This is strictly, the first step I'm going to be indicating is strictly for Forex. And yeah, we've got Asian zone, which is like this, which we say is Asian range. We have our Asian range, right? And then just right here, we have our true day range. And bear in mind, everything is set up to New York time, right? Okay, so true day range. Yeah. Asian range tends to, the Asian range only happens when price reaches 8 p.m. New York time to midnight, right? So it's pretty much data from like the previous day that makes any forms of sense, but yeah. And then we have our 2-day range, which corresponds of our kill zones. This is the London kill zone, the New York kill zone, the AM trend and the PM trend for features, right? I'm just gonna sketch those out right now, something like this. Okay, the first one will be our London kill zone, right? And then we're gonna have our New York kill zone, which is like this. And I repeat, everything is set to New York time zone, just right here, New York time zone, because we're utilizing time and price based on the New York time zone, if that makes any sense. So this is strictly, I personally only utilize this sometimes for features, but specifically for Forex, right? And then right here, we're going to have, let me just make this yellow, our AM trend. Our AM trend. And then we're going to have our PM trend. Sorry. Our PM trend. And then just between the two, we have New York launch. Right? Just gonna go like this. New York launch. I'll make this red. And then we've got the London launch. L. What the heck? Yeah. London launch. Right. So this is basically all the data we utilize when it comes to time and price Well, even though on the side here we'll have our central bank stimulus range, but we don't really have to utilize that for this, right? So Asian range, or the Asian kill zone, is from 8 p.m. to midnight New York time, right? Asian kill zone is from 5 a.m. to, no, it's from 2 a.m. to 5 a.m. Oh, 5 a.m. Then from 5 to 8, we have our lunch. And then we have the New York kill zone, which is from 08, basically 07, but we use 08 a.m. to 11 a.m. Right? And then we have our kill zone trends. This one's are for features. Anything after the New York kill zone is for features. So London kill zone and New York kill zone, we utilize this when trading Forex, right? And then these ones we utilize when trading features like S&P 500, NASDAQ, and US 30. Our AM trend is from 08, 09, 30 a.m. to noon. Right? Our New York lunch is from noon to 1:30 p.m. PM trend is from 1:30 p.m. to 4 p.m. So basically this is our true day range. This is where price opens like this. New day open. Okay. And then here we have our day close. Right. New day close. In other words, true day range. In other words, the range between our new day open to our true day range, right? This is where we are looking to take setups, because price and volatility will tend to present itself within the zones or within this time scale, right? So we regard anything after it as price noise or price distortion. In other words, personally, when trading correlated pairs or pairs that are in battle, I'd say, with the dollar index. In other words, Euro USD, GBP USD, and anything with the USD for an extension, I regard that as price. When the Asian range hits, I regard that whole range as price, not price distortion, price accumulation, because this is where we expect price to often range, or the most likelihood of price ranging will be within this time, if that makes any sense. And then most of our volatility is expected to be within this range. I'll say this is our trading time range, right? So we trade London kill zone, New York kill zone. London lunch, we expect that to be a form of a break. So price tends to have the least volume of volatility within this time zone. In other words, if we're expecting, or if there's an impulse down a specific direction, which in our case is bearish, we'd expect a chance of London lunge becoming some form of a relaxation or accumulation or retracement, just for a continuation in New York kill zone, if that makes any sense. We expect the same thing to happen within New York lunge from the AM trend to the PM trend when doing features. That makes any sense. So we can just utilize this like this, right? And if you'd like to take a screenshot, I'd highly suggest that. Okay, so like now, when we are looking for like the most high probability buy stops and sell stops to identify from our time ranges, right? They have to happen within this time range from our ranging zone, which is the Asian range, towards the end of the new day close, right? In other words, we can have some form of a range within Asian range or Asian kill zone, right? And then somehow, some way, price creates a low, right? We got that as sell side, right? Sell side. The highs, I regard it as buy side. Like that. So in other words, when you're looking for like the highest probability or the highest chance of reaction in price, right, is that we're gonna be utilizing highs and lows, or buy side and sell side, or sell stops and buy stops that are within this time range. In other words, we can get a low that's presented in London kill zone to trade the AM trend price when doing features. We can utilize the New York lunge high or buy side for the PM short, if that makes any sense. We can utilize the Asian range sell side to take a PM long if no sell side was presented within this zone right here. For example, let's say we have price like this, right? And like Asian creates the Asian range, creates the low of the day. Not the low of the day, but the most clearest low, if that makes any sense. Then within like the 2-day range, right, the price on the PM trend reacts off the Asian range, something like this. Let me just clean this up a bit, gotta make things look pretty. But yeah, let's do that like this. Okay. Let me do it like this. Must be within, okay. In other words, if we have like the Asian range is our clearest range low, right, within our whole daily move, if we're trading and we're within the AM trend, right, this could be the New York trend, the London trend, London kill zone or New York kill zone, PM trend or AM trend, right? If price indicates that the Asian range has the most clearest sell side and has the most clearest sell side, right? And we have a specific draw on liquidity or bias or forms of insufficiencies on higher time frames or on the upside, right? We may expect price to react of the Asian range low or sell side to target these insufficiencies or PDRAs moving bullish, right? Of course, there's like a bit more to us when we reach the sell side, right? Because we're not trading support and resistance where we expect price to bounce and push bullish, right? What we do as SMC traders or ICT students is that we anticipate price violating sell side, right? And then as soon as price violates sell side, it should be targeting some form of a PDRA. In our case, as soon as price violates sell side, right, we're looking for a discount array which can be in forms of other blocks or fair value gaps, right? Something like this. So we expect price to violate sell side, target a fair value gap on order block to push bullish, target pretty much the same, right? Because price is only ever doing two things. It's either it's looking to reach highs or buy side or sell side. In other words, violate buy stops and sell stops, or target insufficiencies, which are in forms of fair value gaps and liquidity voids. Liquidity void is basically a gap between two candlesticks, right? A gap like this, right? So right now, I'm going to be showing you an example in the live markets. So right now, we're on GBP/USD, right, on the monthly time frame. The boy head is biased bullish because we had this fair value gap right here. In other words, insufficiencies, right? It was pretty much the clearest one that I personally could see for bullish price. So even through the upcoming weeks or week, I would still anticipate my bias staying bullish, right? Just until we manage to reach at least 50% of this monthly fair value gap, right? And then headed down into the weekly time frame to see if there's anything at this gap right here that I was also anticipating price to react off and respect. In other words, be a form of draw of liquidity. We're just gonna mark that out like this, right? And then, right, head down to the daily. Let me do this. Good. Head down to the daily. But pretty much this was pretty much enough for a bias. All I saw was noise, and the clearest ones were pretty much the monthly fair value gap and this liquidity void, the weekly liquidity void, right? So headed down to the 4 hour, still obtaining the bullish bias, right? Let me remove this. I managed to identify this 4 hour fair value gap right here, right? So I was expecting price to potentially wipe out some forms of sell side or sell stops to target highs and buy stops and insufficiencies bullish, right, for the day. So as soon as I had this 4 hour fair value gap marked out, right, it's getting down into the 15-minute time frame. This is pretty much how it looks, right? In other words, this is pretty much our 4 hour gap, right? And this is our 2-day range. This is where price opened. Right here we have our Asian range. And we also utilize standard deviations when doing this. In other words, our Asian range has to be less than 40 pips when we're expecting a form of reversal, right? Because our Asian range is regarded as accumulation. I provided a video explaining this, but I'm going to remake a few videos because I heard in the comment section that there were audio problems. If that makes any sense. But yeah, was pretty much 24 pips, right? So what we do once we get our Asian range, right, we project it down 3 deviations, right? Pretty much like this, and then like this, right? And the third one below. But price managed to form within the first deviation bearish, right? If you pay attention right here, within the Asian range, we had our Asian low marked out like this. Asian low or sell side liquidity, right? Left bottom like this. And then this is our Asian, this is our London kill zone, pretty much where we utilize or we look for entries, right? Asian range accumulation, some form of a range accumulation, and then midnight to 2 a.m. provided this in the previous videos is our manipulation. London is our distribution. If you pay attention, as soon as price violated Asian low, it was targeting the 4-hour Fairly gap, right? It even managed to pierce the CE, the midpoint of the Fairly gap. And if you also pay attention, right, so we have this Fairly gap here in which price respected, if that makes any sense. And we know that Fairly gaps are respected when price fails to close below it. In other words, price can range and violate it via the wicks, but it should not close below the Fairly gap. And then that's how we regard it as a respected Fairly gap, right? Okay, going into our entries, which is pretty much the 5 minutes time frame. We look for the basic 2022 mentorship profile, which is violation of the lows, attack on a PDRA, which in our case is a Fairly gap, displacement right here, which is our change of character, and then a Fairly gap just below, which is pretty much this, and then this is pretty much our entry, whereby within this Fairly gap we execute a trade targeting insufficiencies and buy stops bullish, right? So if you pay attention, your first target could have been 2 times this impulsive range, which is pretty much something like this. So this could have been your range. And personally, I tend to only utilize 2 times of this impulsive range right here, or this one, right? Which is 2 times. But I'm only willing to allow price to reach this high if I'm getting a minimum of 1:2, right, in my risk ratio, right? So hope this video made sense. Hope everybody understood everything. And if you got questions and would like me to explain something more, be sure to leave a comment. And yeah, man, hope everybody has a nice day. Stay fresh.